What's up guys, and welcome to today's video. Today we're going to take a look whether I think there's going to be a stock crash in the near future. So, I hate to break it to you guys, I'm just going to get this out of the way right now. No one really knows what's going to happen in the stock market. You've got better chance going to some fortune tellers and asking them rather than stock forecasters. And that's the truth. No one really does know. So guys, as someone who is relatively new to investment and trading, I think, this is a really, I'd say, difficult time for somebody brand new to the market, because what you've just come off is you've come off this massive 10-year period where all we've ever known is growth. We've been on a massive bull stampede, and with the recent dip in the market back in March, you had hundreds of new investors pile into the market. And then you've seem to have had a massive rebound. And if you look at things like the Nasdaq, they're reaching all-time highs, which is just ridiculous. So let's take a look at a reason why I think we are in a bit of trouble. Let's take a look.
It's changing out there, just like last time. There's a storm coming, Harry. We'd all best be ready when she does.
So guys, let's start off by looking at the Buffett Indicator. First of all, what is the Buffett Indicator? It is a metric for market valuation which looks at comparing the GDP of the US versus the total value of the stock market in the US. So there's a comparison between, how the economy is performing in reality versus the valuation or the total market cap of the US stock market. So if we look here, today the stock market is about 150% the size of the economy. That's just astronomical. That is ridiculous. So what in essence that is saying is here I produce 10 cars and the value of those 10 cars is $10,000, let's say. And then on the other side you've got the stock price for my company, which makes $10,000 worth of cars. It's valued at $100,000. It is just completely abstract from reality in terms of how much the economy is producing compared to what is being produced in reality. And I guess this is really, really worrying because it's close to the highest in history at the present time. And also, if we look here, it says, in fact, it's actually higher than that, as a second quarter of GDP shrinkage isn't taken into account in this graph shown. And I mean, every time the Buffett Indicator is extremely high like this and is overvalued in terms of the real economy is when we have crashes. So on there, you can see the dot-com bubble burst in 2000, which is something to consider. I mean, that's getting me quite nervous, is this massive just abstract valuation of the stock market versus the actual real economy. So guys, just a quick example of the abstraction of price. I was just talking about these bubbles that are forming. And there's certainly a lot of hype around the electronic vehicles industry right now. If you take Tesla, its share price is astronomically high. All aboard the Tesla train, choo choo. So I mean, if we take a look at the electronic vehicle market in general, it's gained almost 181% over the past month. And companies like Workhorse, Tesla, Nikola, Tortoise are all trading above what is the industry price targets of 143%. So they are trading 143% above what is the target price. And this is just, one of those bubbles which I think is forming around tech and something that we need to be cautious of. But please take a read. It's really interesting, and I'll leave it in the link below. So guys, there's also a lot of talk in the industry about a second crash happening and that we are going to enter a downturn trend soon. So Ray Dalio, famous investor, says we're about to enter the lost decade, which sounds very worrying from my perspective. But if we look here, stocks could fall 40% in a collapse, mimicking the Great Depression, famed economist Gary Shilling says. And what he's really saying here is that the countries haven't come to terms with the long-term economic damage that the current situation is having on the economy. And I think we're seeing a lot of economies putting out, good news stories currently, which are trying to boost their own economies, but all this unemployment that is happening, and we're going to see those in the Q3, Q4, early next year, of the real impact of what's happening right now. And currently, nobody can really say. And what he's saying is that it could be as bad as the recession we had in 1929, which was the worst in history in the US. And that's something to, be cautious of. But a 40% drop, that would be ridiculous. And I think that's a good time to get some bargains, but I certainly wouldn't want my portfolio falling 40%. However, guys, it is not all doom and gloom. There is some hope on the horizon. And that hope is Jay Powell, the main man, Jay Powell, with his akimbo money printing guns, giving everybody in the US millions of dollars. Well, not exactly millions, but if we look, there is rumors of a second stimulus check coming out soon, and it was just confirmed, or it was just announced who potentially might get it, and it's for those who in America are potentially the most impacted by the current economic situation. So those earning less than $99,000, which is still an absolute boatload. But it hasn't been specified. It's still a rumor, but I mean, there is rumors of a new stimulus check coming out, which is always good for the economy. But my concern as an investor is how long can the Fed keep this up? Jay Powell and his money guns can't last forever, and I think all it is propping up an economy with fake cash, essentially. I think from my perspective, if you're pumping, I think the Fed has pumped almost an additional $4 trillion, not billion, $1 trillion into the economy during this period, which from my perspective is going to equal some inflation in the future, but I think we'll have to see. But yeah, there is hope. Jay Powell with his money guns. Right, guys, the other point I want to bring up here is the interest rate. So if we look back at the crash in 1929, one of the reasons for the crash was the stock market value versus the interest rate. And the interest rate was very high in today's standard. It was at 5%. And what happened is the interest rate got changed to 6% over the year. And what that did was essentially make putting your money in a bank account a much more or a better investment than the stock exchange, which led to a lot of people taking their money out, or was one of the causes which helped it. However, if we look at the interest rate today, it's very low. It's non-existent. I look at my bank account and I just cry a little inside every day. They offer us nothing. There's no such thing as interest rate. I think it's 0.25 on my account, which is nothing. And I think this is something to consider is if people can't put their money in bank accounts, where else do they put it? In the stocks. And I think that's, another factor of why we have such high stock valuations currently, is because the interest rate is so low. There is no better place for people to put their money. And I think this, is a counterpoint to the Buffett Index or the Buffett Indicator, is that people have flooded the stock market with their own money because their banks aren't giving any interest. And if you want a savings account or you want to increase your wealth, putting it in the stock market is a better chance of growing it than the banks, and therefore there is more capital in the markets. I think this is just an interesting point that we need to take away. Right guys, those are my quick thoughts on what is happening in the stock market right now in terms of a potential crash. Please let me know what you think in the comments down below, and if you enjoyed it, please smash the like button and consider subscribing. Currently, I am holding most of my portfolio in cash at the moment, ready to jump on any opportunities. But for me, I think, as a new-time investor, I think I'm going to see how this plays out, because I think there is a lot of unpredictability going forward with new outbreaks coming and things we've talked about with all this technology bubbles happening. I think I'm just going to watch it, and I will report back on it on this channel in the coming months, so stay tuned. Have a nice day, guys.